What I think with gold is you'll see gold pull back to somewhere between 1960 and maybe 1930. Any slight pullback that you see in gold or silver will just be a godsend. The math is showing that we are in a commodity super cycle. Okay.
Mukarram, last time we talked, geopolitical impact was the biggest thing. That was making a huge difference to gold, especially, but also silver. Is that still going on right now?
Yeah, I mean, look at what's going on in the Middle East, right? And just this last week, or this week, Blinken was there. He had some unexpected stops as well. He had some surprise stops. I think the situation in the Middle East is one that's evolving, okay? Just because it's been 30 days now since it started, it does not mean that you can sit back and think, okay, you know what, this is done with. I think what you have to understand is you're seeing a lot of segments come into play here. And I've been through geopolitical trades when it comes to gold or crude oil before, right? Going back to 05, 07, all those days. But one of the things you'll notice is sometimes there'll be a lull and then there'll be some profit taking. But suddenly you wake up and then the situation could deteriorate, right? And that's why I think we're observing some mathematical levels in the market, especially gold, silver, crude oil, also in the equity markets, like the stock markets, because that's where people get affected the most nowadays. But also, I think, what would Iran do? What would Lebanon or Hezbollah? All of these things, we looked at the speech that their leader had, the foreign minister of Iran, what he was saying. All of these things go into the evolution of that geopolitical tension over there. The main dynamics that's different here is that this is a very volatile region, and then there's quite a few countries, that share a border that can make things very challenging for any kind of diplomacy or even if there's a ceasefire, right? And the more you see images from both sides that fuel emotional reactions, you're going to see an escalation up there. I do not think that this is going to calm down. I feel like there'll be more of an escalation. This is why any slight pullback that you see in gold or silver will just be a godsend. That's what I would say, especially mathematically, gold's gone up more than $150 or so in 30 days, right? Silver's gone up from 20 and a half to almost 24 on the spot price. That's a big move. What I think with gold is you'll see gold pull back to somewhere between 1960 and maybe 1930, okay, from where it is now.
Wow. Okay.
1960 and 1930. That would be a very healthy, great pullback, because if you look at a gold chart, and we'll go over that today, every day you've seen it go up, right? Session after session after session after session. And therefore you need that pullback, because our expectation from our math models is we believe this time round, after this pullback, that's why this pullback is crucial, it's going to go break this year's high, which was around 2065. And if it does break that, you're looking at 2300, 2200 as the next stop before a 5-step up, 3 steps down kind of thing happens.
It's not that uncommon to see this happen when there's a geopolitical crisis. It happened with Russia. Immediately it spikes up and it starts to go back down again until the next big thing, right?
Yes and no. Okay. And here's why I say this. Yes, there is definitely a risk premium that came into metals. Okay. Because whenever you have a news cycle event, or when you have suddenly a geopolitical tension come up, you're going to see that $30, $40 move up in gold, or $1.50 move up in silver, right? But this is why if people didn't watch our last show, please go back and watch that. We talked about building a trade or an investment based on good math and good fundamentals before major geopolitical events unravel, because a good trade becomes an extraordinary trade because you built that position based on good math and good fundamentals. So forget what happened, in Israel or what's going on in the Middle East right now. But when we were building this gold position, we knew a few things. We believed the Fed was approaching a terminal rate. We believed that there was going to be a pause, which happened a couple meetings ago, a meeting before, and then we said, hey, after that there's going to be another pause, and then it just happened last week. So that's the reason everyone should be getting into gold. Because why am I saying that? The pause in interest rates is going to lead to a drop in the dollar. Okay, the dollar has already shown us that, and I have a great chart to show you that. But the dollar is showing us that, hey, I want to come down. Who wants to listen? Because everyone talks about, oh, the Fed keeps raising rates, the dollar should go up. And yes, it has gone up, but it has gone up within a channel. And about even 6 shows back, if you go back, or 5 shows back, in this Yankee segment, we talked about a double top in the dollar.
We did,
right?
Yep.
And then the first leg happened where the dollar pulled back from maybe 114 or so to 99. Then when it went from 99 to 106, everyone was like, oh, I don't think there's a double top. But that's just a retracement in that double top. And then now you're seeing gold go up $100 while the dollar was going up. That's the canary in the mine, by the way, okay? That if the gold goes up as the dollar goes up, that tells you that the smart money is going to come towards these commodities. And again, great question, by the way, Yankee, and I have to cover a few points, right? So the other thing is we believe the math is showing that we're in a commodity super cycle, okay? So we're not buying gold because of what's going on in Israel. We're not buying gold because...
Could you clarify, what do you mean when you say it's in a super cycle?
It simply means that we expect the double top in the dollar to come to fruition. Mm-hmm. And when that happens, anything that's priced in dollars, and commodities are like crude oil, gold, silver, lithium, uranium, whatever it is, all of them will begin to have their next big wave higher. And for example, if you were trading gold in 2007, 2008, gold had dropped from 1,032 to about 600. Mm-hmm. And then from 685, it goes to 1,900. That's a super cycle. Okay. Crude oil dropped from like maybe $50 to $33, and then from 33 goes to $149 a barrel.
Are all-time record highs part of them, of a super cycle?
Okay. Yes, and that's why we believe that in this next leg up. Now, I'm not saying it's happening in this. I'm not I'm not in that game of predicting which day and what time. But what we believe is in this wave, after a couple corrections, we will break the record high. Now, here's what's interesting. Gold's already broken the record high from 2011. The record high in 2011 was 1,921 or 22. Mm-hmm. We broke that, a couple cycles ago. Then we tested it again, but the challenge has been staying over the 2,000 mark. If you can consistently stay over 2,000, especially if you break that 2065, 2099 area, mm-hmm. then you're going on a new Elliott wave sequence that's going to take you to 3,000.
You said smart money getting in with gold, and we'll talk silver too in just a bit, but does that include central banks?
I mean, I love that question. Okay, smart money can sometimes be dumb money too, okay? Let me say that because of the way they follow trends and do things. But right. Central banks are not really smart money, but central banks are sovereign assets, right? Like sovereign funds or central banks of countries that decide, hey, we're going to go this way. Now, sometimes central banks have made horrible decisions. Like if you look at the Bank of England, going back, a couple decades ago, when they sold off all their gold, or when they went against the pound, when they deflated the pound and George Soros made all that money against the pound, right? But if you go back and look at gold, mm-hmm. physical gold, a lot of central banks, we have noticed, and I'm sure a lot of your knowledgeable crowd understands that they've been hoarding gold all of last year at record high paces, right? Especially Russia and China buying physical gold. Now, a lot of people think, okay, that's because they're worried about a currency crisis, or they're worried about, maybe, and some people might even think that there could be a new reserve currency coming in. What we believe is a lot of these major countries are central banks are hoarding gold or buying gold at record numbers because it's sanction proof. A lot of these major countries that may not have the same political views as the United States or may not have the same geopolitical view as us are going through sanctions on their money, right? Like Russia had sanctions. Russia's central bank assets got sanctioned. Then you got Iran is worried about that. And China may be worried about that. So if ever, because we've been in this trend, especially with this new, this administration in the last year and a half to 2 years, a lot of support is going towards wars and they're taking sides that sometimes certain countries don't agree to. That's why I think they're holding gold, because it's a sanction-proof asset. Okay. Not just playing a safe haven role, but it's a sanction-proof asset for them.
All right. If people are watching right now, they want to speak to you. The details are both in the chat and also in the description.
You can call my direct office line, which is 949-200-7047. You can email. You can speak to my executive assistant. We'll try our best to help you, because this time is very important, so you can put your vision together and then have an idea on how to increase your net worth over time. Okay.
All right.
Everyone have a great week. Okay. Take care.
Take care.